Would you spend $1 billion to be the first foreign asset manager to own 100% of a Chinese fund management company? Ladies and gentlemen, hello and welcome. From April 1st, 2020, foreign entities can apply to take 100% control of public fund management companies in China. This marks the end of a process arguably begun back in November 2017, when Chinese regulators launched their super guidance policy and guided in the interim with other announcements like the Boao Financial Forum, the 10th UK-China Economic and Financial Dialogue, and the announcement in 2019 of 11 additional measures to changes in financial institutions in China, before announcing in October 2019 that the timetable for 100% foreign ownership of fund management companies will be brought forward from 2021 to 1 April 2020. It also marks the beginning of a new era in China's asset and wealth management industry, one where foreign asset and wealth managers can take control of their existing FMC JVs or apply to receive a public mutual fund management license and start their own operations from scratch. Since 1 April 2020, we have already had announcements from Blackrock and Neuberger Berman that they intend to apply for a public mutual fund management company license. Some others, of which I've spoken to some of the representatives directly, are expected to follow presently. Wading right into the thick of things, JPMorgan is announcing that they will spend around $1 billion to require the remaining 49% of their FMC JV with Shanghai International Trust, who is a subsidiary of the Shanghai Pudong Development Bank, which also has a direct stake in the AXA SPVD FMC JV. All the way back in August 2019, we saw JPMorgan spend 241.3 million RMB to acquire a 2% stake in its JV and give it majority control, the first foreign asset manager to do so, and for which it paid a premium of around 33%. Now, JPMorgan is spending $1 billion to acquire the remaining 49% stake in an asset management company that, at the end of 2019, had 150 billion RMB in AUM. This represents around a 9.67% premium on its stake. With Chinese public mutual fund AUM forecast by some to reach over 36 trillion RMB by 2025, in the future, will we look back on this and see it as a strong move, or will we look back and refer to it as diamond's folly? Perhaps more importantly, will we see other foreign asset managers make similar plays to get full control of their FMC JVs? Only time will tell. Let us know your thoughts in the comments below as to whether you think this is a good move or a bad move, and what impact you think it will have on other foreign asset managers as they start to make their plays for China. Thank you for watching. We look forward to seeing you next time.